Good morning, students. I've had some questions on the Ramona rice problem and this whole inventory valuation, so I wanted to go over this problem with you. First, I want to go to the PowerPoints on Blackboard. Okay, we're looking at putting a value on inventory. Those are the problems that correspond with Ramona rice. Right below that is the blank copy, and then right below that are the answers to the problem. Then I put a YouTube link up for the Kodak problem that can be found here in class and homework problem. The homework problem is the computer problem. It follows the Kodak problem. You can also find it under the assignment tab. So you need to make sure that when you submit it, it is submitted under the assignment tab on your toolbar here. Okay, so go in there and either type your answers or upload it. Okay. Now, let me go to these PowerPoints here and just try to quickly tell you what we're doing again. Inventory is found on your balance sheet as an asset, and it's also found on your income statement when you sell it as cost of goods sold. So what we're trying to do is get a dollar amount. And companies are allowed to have 4 different options here. Okay, these are just assumptions we assume about inventory. The main thing we're looking at here is number 2. These are the 4 methods that you can use to put a dollar amount. Companies generally only pick one, and if they change, they have to document why they're changing. There are various reasons for having these methods. Okay, generally accepted accounting principles recognizes all of them. However, international principles does not recognize LIFO. Okay, I'll talk about that a little bit later. Okay, these are the main 3: first in, first out, last in, first out, weighted average, the other specific identification. Okay, there are reasons for using each of these, and I will intend to do another video to show you how it affects net income, but that will be posted either tomorrow or Friday. Companies that use these, most of them use FIFO, first in, first out. The majority used to use LIFO until we found out international standards did not accept that. LIFO was actually set up in the 30s to help decrease taxes, and I'll show you how that works later. Weighted average is 20%, so it's middle of the road, and then specific identification. Companies, most companies don't use that, only 4%. Okay, so you need to know about that. Okay, here's Ramona rice. Let's work through this, and I'll try to explain what we're talking about under each method and how you get the dollar amounts for both cost of goods sold and ending inventory. Okay, let me secure my phone. This is a learning tool for me. I could use the computer or Zoom, but this is easier for me. Okay, now, when you do one of these problems, okay, you need to get what we call goods available for sale. So goods available for sale consist of beginning inventory plus purchases. Okay, beginning inventory plus purchases. Now here's beginning inventory. Here are your purchases. If you add those up, that gives you all the goods that you have available for sale. Now for our problem, we don't want to include in the figure goods available for sale what they have there about sold inventory. That's important. Okay, but we're not going to include that in these calculations I'm about to do. So over on the side, what you need to do is you need to multiply. Rice is sold in bags of kilos, which is about 2.5 pounds. I usually kind of make a little joke that I don't know of anything sold in kilos except marijuana, and I've never seen any, so I'm not familiar with how big it is. So somebody told me it's about 2.5 pounds. Take the 10 kilos and multiply that times the dollar amount that we paid for the rice. Now we intend to resell it. So 10 times 4 is equal to $40, and that's going to be your beginning inventory, a dollar amount. And then on November 17th, we purchased 10 more kilos, but the price had gone up. So this time the price is $9, which is $90. And those are our purchases. Now, in the Kodak problem that I've already done for you, there were several purchases. So this is a very simple problem just to get you started. I wish I had it the other day, but I did not have it done at that time. So goods available for sale would mean we have $130 worth of rice. And currently we have 20 kilos, okay? So that's 20 kilos valued at $130. Now we want to find two things here. We want to find cost of goods sold, which is the amount we've sold, and then we want to find what's left, ending inventory. So we want to start with cost of goods sold. Now, under the first in, first out method, that means that we want to sell the older rice first, like in the example with the milk. Okay, the older milk is usually put in the front for you. If you're looking at a silo, okay, and there's a picture of a silo here. Let me scroll down. Okay. On your PowerPoints, there's a picture of a silo, and rice and grain are usually put in silo. They would put the rice in the top, and it would fall all the way down here to the bottom of the silo. So you would be picking the rice up, okay, down here at the bottom. That would be the older rice, okay. If you wanted the newer rice, you'd have to go in at the top because that would be the newer rice. So it's based on the date, okay, date. Do keep in mind that some of this rice would actually be mixed up too. So first in, first out. In this case, the oldest cost will go with cost of goods sold, and the most recent cost will end up in ending inventory. So let's come back over here and let's work this first part. If we're going to sell the older rice, we're selling 10 kilos. That's where this number comes in, okay? So you want to go to beginning inventory. You want to start with beginning inventory, and we want to pick up the rice in beginning inventory, which we paid $4 for. So remember, we're selling 10. So we've sold our beginning inventory there. That means that cost of goods sold is going to be valued at $40. This is cost of goods sold. Okay. Now, the way you get ending inventory, you want to take your goods available for sale and you want to subtract to get ending inventory. Okay. So goods available for sale, 130, minus cost of goods sold, 40, means that ending inventory will be valued at $90. Okay. Now let's move on to LIFO. And the answers here are on the PowerPoints. So if you're working on LIFO, you're going to go to the top of the silo and you're going to get the most recent purchases. Now, here are the answers for FIFO. I'll get to this part later, so I'll try to do you a PowerPoint on that later. Or not a PowerPoint, a video. LIFO's last in, first out. So what you're going to be doing is selling your most current inventory, like with the milk. You would be selling, if you did a LIFO system, you'd want the most recent milk. And the problem is that leaves the older stuff in inventory. It can either spoil if it's produce, or it becomes obsolete if it's a computer or Apple, iPhone or something. And generally companies are going to start cutting prices and getting rid of them because they can't sell them. So that's the problem with LIFO there. Okay, that's one issue. Okay, so with LIFO, you want to start with the most recent purchases. Okay, so that would mean we're going to go all the way up here to November the 17th. And the 10 kilos that we're selling, we're going to cost them out at $9. That means $90 is your cost of goods sold. And remember, it said your most recent cost would be cost of goods sold. And then your older cost would mean that your beginning inventory is still sitting there. Okay, so you want to subtract that 90 from your goods available for sale, which was 130. And that means your ending inventory is the same thing as your beginning inventory in this case. It's $40. So it just sits there, and unless you sell more than 10 kilos, that will never get sold, and it'll just continue to sit there until you can't sell it and you have to give it away or scrap it. Okay, that's the problem, one of the problems. Okay. Now, here's the answer on your PowerPoints. And again, I will get to this part right here in another video. Weighted average. Now, under weighted average, it's like you're mixing it together, like I told you. Physically, we would not normally mix milk together like that, or rice at this matter, but just get the visual of mixing it together so that everything is evened out, and that's what we're doing here. You have to start with a little formula. What you're doing is you're getting your dollar amount of goods available for sale, and you're dividing that by the number you have on hand. So let's go back here. What you want is the dollar amount, and you want to divide that by the number of units. Okay, let me secure this up here on my glass. So the dollar amount came from the top here, all the way to the top where we calculated it, $130. Number of units we have available would be the 20, okay, the 10 at the beginning and the purchases of 10. And when we make that division, it averages out to $65 per kilo, okay, $65 per kilo. And then you want to come and multiply that times the number sold. And in that case, it's going to be 10. So your cost of goods sold then is going to be $65. I'm sorry, and this should have been $6.50, not 65. Okay, so correct that, $6.50, I believe, yeah. Times 10 is $65 for cost of goods sold. Now, again, you want to subtract this number from your goods available for sale up here at the top. So let's just write it over. Goods available for sale was $130 minus our cost of goods sold, $65, means that ending inventory $65. So we smoothed it out. Okay, we just smoothed out the differences here. It's a conservative approach. Answers are right here. And again, now we want to go on to specific identification. Okay. So under specific identification, I tell you what kilos we're going to sell. It's like, let's go into the warehouse. We're going to sell a few of them from beginning. We're going to sell a few of them from recent purchases. So I have to give you the numbers of what we're selling. And here they are. We sold 4 kilos that we paid $4 for. So that's going to be $16. Do a multiplication. And I sold 6 kilos that I had paid $9 for. That's going to be $54. So our cost of goods sold would be $70. And again, the way you get ending inventory is to do the subtraction from the number at the top, goods available for sale, $130, minus cost of goods sold, $70 gives you an ending inventory of $60. So that's the mechanics of how to do it. Again, your answers are on your PowerPoints. There's more information here as to what each one does. You need to study this slide on advantages of each. And then the LIFO. The reason 39 was to save on taxes. Again, I'll try to show you how that works in another video. But just know that LIFO, that's the reason for it. Other countries don't care about our taxes. They tax in different methods. So that's another reason that LIFO is not used by other companies. And it also keeps your older inventory there that becomes obsolete. You have to be consistent, continuing to use whatever method you choose. Otherwise, if you change, you have to document it. Okay? And then I did the Kodak problem for you in another PowerPoint, and your homework was supposed to be the computer problem. Here's another example. It needs to be done on the assignment tab over here. Let's just go over there and see, make it where you can see it. Okay, see if I can get up there. Where is the click on? Here it is, and show you. Okay, there it, come on, there it is. And if you'll click it on, it has the problem there. Okay, it's due March 27th by 5 p.m. There's the problem. You can either type in your answers, or now if you type in your answers, you would hit the right submission button here, and it opens up for you to type in, or you can work them out on paper and upload it to your computer, and then come down here to the bottom. And where's the submit? Yeah, here we go. Down here, the black button would be the submit button if you uploaded it or if you typed it in. So you have two options there, and have that in for me again by Friday at 5 o'clock. Okay? Email with questions, and I'll have you another video, I hope, tomorrow. Take care.